Hey guys, this is Market Update. In this video, we'll look at potential price action over the next few months as we potentially break out into all-time highs. It feels like the market is warming up again and we want to actually go higher. I think we're at an all-time high right now. Last week was the highest weekly candle close. If you look at the monthly, May is going to print the highest monthly candle close. We are at an all-time high, right? So very good price action, but will it continue? We'll go through that in this video. Before we get into that, the 20% discount for the crypto course expires June 7. You get all of these videos. If you type BTC at checkout, you get 20% off. I update it for free forever for existing users. You can see my mate update is here and 300 other videos on just setting yourself up with an investment portfolio in the modern age, not just crypto as well, but obviously using crypto tools as well. Check it out via the link below if you're interested. But here, I think we go higher over the next few months, right? Because we're trying to break out and we have these breakout periods. So you can see around a 50% move as we broke out of the resistance there. That was a 60% move. This was a big move here, around 80%. What's the bounce right now? We're at 30. So if that goes to 50 or 60, you're looking at 120, 125 for a potential breakout there. Are we going to bounce around a little bit more? I don't know. I don't think it's important, right? If you've got a few months time horizon, it just feels like we want to go higher, right? The Genius Act in the States has passed. That's a stablecoin bill. So bullishness. Now in the last video I said, should you be selling your Bitcoin here? Because a lot of people were, or a lot of people are. You can see that data. And in that video I said, look, I'm never going to tell you not to sell your Bitcoin. Bitcoin is money. It's an asset for savings and you spend it to make your life better. If that's good for you, you can do. In that video I also said the data I'm looking at says that I think the price goes higher, right? I can see flows coming in. The price action just feels like it wants to go higher. Businesses, funds and governments are buying Bitcoin and individuals are selling. So I get that, right? Individuals may be in profit. They've taken a lot of risk and volatility over the last few years. I get it. You want to take some profits, that's fine. But in that video, I said I think the price goes higher. In this video, I'm saying again, I think the price goes higher this cycle. So I never tell you not to sell. I just think the price goes higher. You can feel the price action, feel the buyers coming in, trying to push us up to new all-time highs, right? So let's have a look at this. You can see that again. This is in blue, this is accumulation, and in red, it's distribution. All the different cohorts. So essentially whales down to shrimps. They were selling here. A lot of individuals selling potentially as well, taking their profits around 100K, right? I totally get it. But it looks like we're moving into more accumulation again. And when that happens, you see it doesn't really stop. We're just coming into it now. You can see the price moves higher as you get this accumulation. If people are accumulating, if there's fewer sellers, then you have to move the price up, right? Because if you want Bitcoin, you're going to have to buy it from someone. So it's only about the price. If you want it, and there's been distribution here, so the sellers that were going to come in have sold, and they sold the amount that they wanted to sell then, well, they're out the market. So if you're still buying, then the only thing you have to do is move the price up in order to shake out some more sellers. Now, if you look at this as well, this is global money supply with the Bitcoin chart. I'm sure you've seen this a million times now, this chart. But look, run this forward a few months and it's pretty decent in terms of the risk reward for BTC going in long here, right? Trying to trade that breakout. Now, it would be best if you were accumulating down here during this sell-off, because obviously the risk reward is a little bit better for a bounce. But over the next few months, it's looking fairly positive. And if you can see here, these breakouts, let's say a 40 to 50% breakout, we're not really near that yet, right? We're at kind of 30%. 50% breakout even is a little bit higher, right? To 120, something like that. So could go to there, could go a little bit higher for a potential breakout and a potential kind of high price before we get maybe another consolidation. Could go even higher, right? If you look at this, that's going to maybe 140, 150. So it looks positive and the sentiment's changed and the selling has changed. And now we're moving back into, cutting the tariffs a little bit, cutting taxes in the States, the tax bill moving through. All of that is fairly stimulative, and I think it's fairly good for the BTC price potentially over the next few months. I'm sure you don't need convincing that Bitcoin is a strong, desirable asset. You own it, right? You're watching a crypto channel. There's a logo in the background. So you own Bitcoin and you know why you own it. So the next few slides I'm going to show you really prove that the more things change, the more they stay the same. And that's because the system fundamentally is like this. But there are solutions to the fiat system owning assets. And now we can own a strong, desirable asset the world over. You can buy $10 of it. It's Bitcoin, right? Now, housing has been a great store of value, as in it has measured the debasement of currency, land and property. That's fine, but a lot of people can't own it, and you can't own $10 of it, right? So We know the characteristics of Bitcoin. The issue with the world right now is that debt to GDP is too high. In the US, UK, many other countries, the amount of debt in relation to GDP is too high. So they want to bring the debt to GDP ratio down, or at least actually not make it continue to grow at this pace, right? You can't cancel debt. You bring the debt to GDP ratio down, you can't cancel the debt because the debt is the currency. The debt is the currency itself. You have, especially from the government, you have outlays and liabilities that you have to pay into the future. So you need currency units. You can't cancel the currency. There's interest to be paid, there's liabilities to be paid out. You actually need more currency units over time. So you can't reduce debt nominally, but you want to reduce it in relation to GDP. So how do you grow GDP? Well, if there are more and more humans being created, then the amount of GDP you measure can go upwards because more human beings can create that GDP. You can have a lot of immigration into your country, and that increases the amount of GDP, maybe not per capita, but certainly it can increase the headline rate, or you can literally print money, right? You can inflate the price level. You can inflate the price level through pumping liquidity into markets, creating more currency units that chase the goods, that push the prices up. That's what they want to do. If we look through history, the only one solution to reducing debt to GDP, there's only one that's ever been used, which is inflating the price level and inflating GDP. So you can do that through printing money, because guess what GDP is measured in? The fiat currency. GDP is measured in fiat currency units. You can literally print GDP by printing money. Look at the pandemic. We're all shut in our houses and GDP went up. They printed GDP higher by printing currency units. When the US Treasury Secretary tells you that if you hold fiat currency or bonds, you are going to get destroyed, you have to believe what he's saying. He is saying in public, I am going to absolutely destroy you if you hold fiat currency or bonds. That's what he's saying. Our focus is to grow the economy faster than the debt. So they're not trying to cancel debt. They're not trying to cancel currency units. In fact, if they can create $1 of debt and through that debt create $1.1 of GDP, that's something they'll do, because that even debases the purchasing power of those future dollars. Right? If you can create $1 of debt and get $1.1, $1.2 of GDP, who cares, right? You're debasing that currency into the future, and you're debasing the liabilities that you have as a government, right? So this is the game, and if you hold bonds or fiat currency, you cannot be shocked or upset when your purchasing power falls 50% over the next decade, or 15 years, 20 years, whatever it is, because they're telling you in public, in the media, that if you hold this stuff, you will get destroyed. So it's not, you cannot complain if you hold bonds and you're going to lose all your purchasing power. They're telling you what they're doing. So they are telling you, they're being nice about it because they're coming out in public and saying, if you hold bonds, we're going to destroy you. Go into other assets. That's why we're in Bitcoin, right? So the only way to debase debt to GDP, to grow GDP, create price inflation, raise the price level, which means everything's going up in price, including your house and Bitcoin and stocks and the meat that you buy on a Wednesday and everything else, right? So this is the way that they sort out debt to GDP ratios. It is by inflating the price level. That's why we're in assets. Tax bill advances. This is massively stimulative. There's no fiscal austerity happening here. There is no austerity happening at all. Not happening. They are inflating the price level. They are telling you we're inflating GDP, we're inflating the price level, we're growing the economy. That just means creating huge price inflation, trying to debase this debt. We're creating more debt, more currency units to try and grow this GDP. We're deregulating banks. We want them to create currency units. We want this investment boom, bring up the price level, right? So inflation is not going down ever. The only way to debase currency is to create this inflation, and that's what they're saying. So if you're in the currency or if you're in the bonds, you will get destroyed. This is stimulative. That tax bill is going to be highly stimulative. It's going to keep the deficits running, and that's bullish for markets because the currency will debase. Now, who's buying this debt, right? If you're issuing all of this debt, who's buying it? Because you can't just have the central bank buy it all, because the whole fugazi, right, the fugazi of the fiat system then collapses, because everyone looks around and says, wait, you're just printing this stuff over and over. That's not what we're in for, right? So you start to abandon the currency. Well, they can't have you abandoning the currency. The whole thing will fall apart if everyone abandons the currency, right? So you need buyers for the debt, actual buyers. The only new buyer for US government debt is stablecoins. And the Genius Act is going to pass, it seems like, It hasn't passed as yet. It's going through the process. The Genius Act is a stablecoin act which will ensure US dollar dominance. The dominance of selling this debt out, because you have these liabilities that you have to pay, and you have to keep creating the currency units to pay them, keep inflating the currency, and you need buyers. But the typical buyers don't want to buy this stuff anymore. China's getting rid or actually coming down with their debt. They want to buy ports and mineral rights, right? If you look at the Middle East, they want to buy football stadiums and clubs because those are trophy assets that keep their value over time versus bonds. Anyone in bonds is getting destroyed, absolutely destroyed. If you hold any bonds, that in real purchasing power terms is going down a lot. You will not make money in bonds, right? You're going to get destroyed. And who's buying the bonds? Well, it's going to be developing nations, people in developing nations that have even worse currencies. So they're going to proliferate dollars around the world through blockchains and through stablecoins, and that will be the demand for dollars, where they can keep issuing these dollars out and keep debasing the holders of dollars by 10% a year. So if you're in a developing nation and you were getting debased by 30, 40, 50% a year with your local currency, maybe getting debased 10% a year is not so bad, right? And the US has been a hugely successful nation with its bondholders getting debased 10% a year. So it's not the end of the world. But if you have assets to save or savings, you're getting destroyed in bonds. And that's why the Bitcoin is obviously the solution to this, right? It's because there's no debasement and you can just price all of this in. But there has to be buyers for bonds, and there has to be someone that's getting debased. And anyone bringing up stablecoins is getting debased if you hold them for the long term. But of course, they're useful for the short term and cash management, which we need because we're enforced into the fiat system through legal tender rules. So there's new buyers for bonds, and it's developing nations who will continue to get debased. The government will still keep running deficits. The currency will get debased and increase over time. There will be huge price inflation, and that's why we're in Bitcoin, right? I think we go higher this cycle, and I think we continue to go higher over time. And the moving average of the price of Bitcoin, I think, will go through these green lines and keep moving higher. The fiat currency continues to debase itself, so why would it not? They just sit through the volatility. If you want the crypto course, 20% discount ends first week of June. Type BTC at checkout. You get 300 videos on setting up an investment portfolio. You can trade on Bybit as well with a $30,000 deposit bonus if you check the link in the description. Wherever you deposit, they'll give you a bonus. All the links down below. I'm James with MyZG. Cheers for watching, and I'll see you in the next one.